Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 32nd report of 2018. And as usual, we're going to start off with the changes in commercials position. But before I go into the review, a reminder for all of you, we've got two new services out, FuturesTradingGuides.com, focusing on futures markets, and FXTradingGuides.com, which focuses on, not only on forex markets, but also on cryptocurrencies as well. So let's start off with this review with the Nasdaq, where we have a 17% change in commercials positions. You can see that change size over there. It is a bullish COT change signal, a bit larger than average, but nothing too unusual in the Nasdaq market. So I would rather skip that signal and move on to the 5-year chart, where we can have a look at the COT Extreme, which, as you may see, is interestingly just moving away from this bullish extreme right over here, which, as of course you can see, it was a successful signal. Prices have pushed higher from here, but looking at this wider perspective, it's surprising to see traders at these levels. Nevertheless, of course, you have to look at other indexes, COT report as well, due to the significant correlation of these markets. Moving on to the cocoa market, where we have a 16% change in commercials positions. You can see that change over there. Here, this change with respect to the changes in the past 52 weeks can be considered a more serious change than the one we just saw in the Nasdaq. So this is a bullish COT change signal, suggesting prices headed a little bit upwards early next week. There's a good chance that that is going to happen. Jumping to the 5-year chart, you can see that we are moving away from this bearish extreme that we had a few months ago. Since then, prices have rapidly declined, and as the price of cocoa is declining, you can see that traders are shifting their positions, and slowly, steadily, we are getting more and more bullish. Now, of course, if you look at this 5-year chart, you can see the back over here in mid-2017, we had an even greater bullish extreme in the market, which was strong enough to push prices upwards. We are pretty far away from those levels. You can see there's a 28-27 report extreme in commercials and large speculators. This can easily continue, which means even though we have this bullish COT change signal suggesting a bit of a rally early next week, one should definitely look at this wider perspective, which suggests that further decline in this market is easily possible. Natural gas is our next market, where we have this 15% change in commercials positions. This is a bearish COT change signal that says there may be a bit of a decline early next week. Again, we are talking about a larger than average change size. And if you look at this 52 weeks range, it can be considered a change signal. I wouldn't say that it's too large. So let's jump over to the 5-year chart, where we can have a look at the extreme situation, and you can see that there's nothing too unusual. So I would rather skip this market all in all from the COT data's perspective, and move on to large speculators COT Extreme, where we have here we have interesting signals. This all-time COT Extreme in the Chicago wheat, which is not only present in large speculators positions, but also we have a commercials all-time COT Extreme as well. Now, of course, this is a bearish COT Extreme, and if you look at the market, you can see how well the Chicago wheat reacted to bearish extremes in the past. So there has already been a decline, as you can see in the market, which suggests there may be further declines coming, and definitely the report suggests that. So there may be a significant shift in the trend, which, of course, if you look over here, late last year, early this year, we had this bullish extreme in the market, which pushed prices up higher, and now we've moved away, significantly away, to all-time bearish extreme levels, suggesting there may be a significant shift in the trend of the Chicago wheat. Coffee is our next market. Again, all-time COT extremes over there, all over in large speculators and commercials positions. Here we are talking about a bullish COT extreme, as you may see on the chart. This has been growing larger and larger for quite some time now, which of course means this can easily continue on for a few more weeks. So caution is advised before entry. But one thing's for sure, if you look at this wider 5 years picture, then we can definitely see that since basically, I would say, the end of 2017, where we had this beautiful bearish extreme in the market, which pinpointed the end of this rally, and since then the market shifted to a downtrend. That seems to be coming to an end. And of course, this can easily stay the case for many, many weeks or even months before we see a significant shift in prices of coffee to the upwards. Last but not least, we have this the Swiss franc, where we have a 579 report extreme in large speculators. Also in commercials, of course, if you would be opening the COT index, you can see that there's a significant extreme in the market in commercial positions as well. So here we are talking about a bullish COT extreme. You can see that it has been in the market for the past few weeks now without any significant change in prices of Swiss franc. But of course, this doesn't mean that the price of Swiss franc cannot increase or start rallying in the next couple of weeks. The market is definitely, or the COT report is definitely suggesting a major shift in the trend of the Swiss franc. So that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.